In this video, I'll discuss cryptocurrencies and how to invest in them, and we're starting right now. Hey guys, welcome to another video from the Keystone Financial Academy. My name is Elliot, and if you're new to this channel, I invite you to join our community by subscribing and turning on notifications so you don't miss any of the upcoming videos. So if you're watching this video, chances are you know a few things about Bitcoin and some of the other cryptocurrencies. It's hard not to because, at least as far as Bitcoin, it's in the news all the time. And as this video is being filmed, it's surging past $28,000 for one Bitcoin, which is a record high. So this is a good time to take a deep dive into the subject of cryptocurrencies and discuss exactly what they are and how to invest in them, including whether or not you should. Now this could be a fairly complex topic, especially if you get into the technical details of cryptocurrencies, such as the subject of blockchain. So I will try to stick to more of a top-level overview and then go right into talking about investing in cryptocurrency. So what exactly is cryptocurrency? It's defined as a peer-to-peer, decentralized electronic cash system that serves as a medium of exchange and a store of value. In plain English, cryptocurrencies are digital forms of money that aren't tied to any government or banking system. Now, of course, you've heard of Bitcoin, but there are a number of other well-known cryptocurrencies such as Ethereum and Litecoin, as well as literally hundreds of lesser-known currencies. Bitcoin, however, was the first major cryptocurrency to be introduced, and its development is credited to an anonymous developer or developers named Satoshi Nakamoto, who kicked things off in 2008 with the first ever blockchain database. Now, like it or not, it's impossible to mention Bitcoin and most of the other cryptocurrencies without talking about blockchain. But as an investor, this is something you should know about and be interested in, because here's the thing. Blockchain is a technology that is quite revolutionary, and it's already being used across a wide spectrum of industries. While Bitcoin and most of the other cryptocurrencies is just an application that uses blockchain. So if you only invest in crypto, you're missing out on the big picture. And you really should also be looking at companies that use blockchain to create viable businesses. With that in mind, let's do a brief top-level overview of what blockchain is and get a bit more familiar with this technology that powers Bitcoin and quite a few other cryptocurrencies. A blockchain is a digital ledger of transaction records called blocks on a peer-to-peer computer network. They are linked via cryptography into strings called chains, hence the name blockchain. Each block has to have the transaction data, timestamp, and a cryptographic hash function abbreviated as CHF of the previous block. CHFs are basic tools of modern computer cryptography and are essentially algorithms that map data to hash values. Their details are complex, but what's important is that these are one-way functions that are not practical to invert, hence their security value. So therefore, a blockchain, by design, can record transactions between two parties efficiently, verifiably, and permanently, and is resistant to modification of the data. The simple reason for this ability stems from the fact that recording of the blocks happens across many computers, and any one block cannot be modified without altering the subsequent blocks in the chain. Since that would break the consensus of all the computers on the network, it is not permissible. So that was a concise and fairly technical definition of blockchain, but what does this all have to do with Bitcoin and cryptocurrencies? Quite a bit, as it turns out, but to see why, you first have to look at centrally regulated conventional currency like the US dollar. You have various trusted third parties that control it, from the US government that prints and backs up the money to the banks that hold and distribute it and process payments. We also have trusted third parties in commerce such as Amazon, eBay, and PayPal, and many others. And these third parties assure that the money is legit, and that if you buy something you actually pay for it, and if you order something you actually receive it. What if, however, you wanted to bypass the third party completely and communicate peer-to-peer through digital commerce? Well, as it turns out, things get much more complex, and suddenly a whole world of what were once insurmountable problems arise. Peer-to-peer communications and dealings are great, and that's the whole point of Bitcoin and the other cryptocurrencies. But how do you trust the other person if you don't know them? Who is to say a transaction even happened if there's no trusted big brother watching over things? And most relevant to our topic in hand, what if you wanted to introduce a digital currency? How would you know that the same money would be spent many times over, thereby devaluing it? And how do you prevent somebody from just copying it, a sort of digital counterfeiting? Clearly, something needs to be baked into the peer-to-peer model so all these issues are resolved to everyone's satisfaction. So the solution to these technical issues is the public digital ledger system, or blockchain, that I just described previously. It logs all transactions, in this case digital currency being spent, and stores and updates this information on multiple computer servers across the vast peer-to-peer network. Essentially, this system solves the double spend problem, which is exactly what it sounds like, along with a few other thorny technical challenges. A key part of the solution is called proof of work, or POW, which is the process of making a computer solve a complex mathematical problem. And this is not only how Bitcoin transactions are verified, but also how new Bitcoin is mined. I won't get into the details of POW because I promised I wouldn't make the discussion overly technical, and we're actually going to conclude it here and focus more on the investing side of things. So the first thing you need to know as a potential crypto investor is that there are quite a few cryptocurrencies out there, actually over 5,000 in total, but only a small handful are actually used in transactions and invested in. The big three are the ones I mentioned earlier, and they are Bitcoin, Ethereum, and Litecoin. There are a few other notable ones such as Dash, Monero, XRP, and Bitcoin Cash, but it's the big three that most investors get involved with. Okay, so let's say you just decided to invest in Bitcoin. At over 500 billion in market capitalization and with over 18 million coins in circulation, it is by far the biggest cryptocurrency, and it's currently trading at over $28,000 per one Bitcoin. So the first thing you need to do is open an account with an online cryptocurrency broker. I personally have always used Coinbase.com, and while I'm not necessarily endorsing them, I do like their clean, no-nonsense interface and the vital statistics on all cryptocurrencies that I can get from them. Of course, there are a few other brokers as well, such as Bittrex.com and Kraken.com here in the US, and Bitstamp.net and Bitfinex.com overseas. So once you open a trading account, you just link it to your personal bank account, and then you can begin purchasing and selling cryptocurrencies. You simply select the currency you wish to buy, the dollar amount you wish to spend, push a few buttons, and the currency is transferred to your account. Now, one thing you will notice very quickly that unless you're plunking down the entire value of, say, one Bitcoin, you will buy just one fraction of the coin in proportion to what you paid. So for Bitcoin at the current $28,000 per coin value, if you spend $100, you will actually only get about 0.00369% of the full coin. Once you make the purchase, there really isn't a whole lot more you can do except keep an eye on it and either buy more or sell, depending on your own judgment or sentiment about what you think may happen next. So as you can see from everything thus far, understanding blockchain and the rest of the technology that underlies cryptocurrency may be challenging, but actually investing and trading in crypto is pretty easy. The big question, however, is should you invest? The first and most important fact about investing in Bitcoin or any cryptocurrency is that you're not really investing, you're speculating on asset value. Keep in mind that when you hold a portfolio of Bitcoin, it won't pay you dividend like many stocks do, nor will there be any corporate profits to push up the price. Bitcoin is not a company, and its shares don't appreciate in value in any traditional way. What you and hundreds of thousands of other investors are actually doing is simply speculating on whether the digital currency will rise or fall in value and buying or selling accordingly. Now, there are some rational reasons for Bitcoin's current astronomical price that has to do with the US dollar being weak and the Fed's interest rate projected to be near zero for the foreseeable future. But it's also this high because everybody right now wants a piece of the action. And as demand for anything grows, money pours in and the price skyrockets. Does this high valuation mean that Bitcoin is the currency of the future? Maybe, maybe not. No one can predict with 100% certainty where this is all going to go. However, having said that, the future does look pretty bright for Bitcoin and some of the other cryptocurrencies, as major retailers like Microsoft, Overstock, Whole Foods, and even Home Depot have started accepting Bitcoin as payment. And many smaller companies are on board as well. In the meantime, blockchain as a technology has flourished, and many finance and other applications have emerged for blockchain, and that is a topic for another video. So the bottom line is yes, go ahead and invest if you want to join the party, but be sure to only use money that you can afford to lose. Bitcoin, Ethereum, and Litecoin are all very volatile in price. And Bitcoin's value has dropped dramatically several times in the past, like it did in 2017, taking quite a bit of investor money with it. There's a good chance Bitcoin may break through $30,000 per coin in the next couple of days or weeks, and it can also drop below 20,000 again. It is impossible to predict with any certainty, so don't risk money that you need to use somewhere else. And I wouldn't personally have more than 5 or 10% of my portfolio invested in cryptocurrencies of any kind. Okay, so these were the essentials of blockchain, Bitcoin, and investing in cryptocurrencies in general. And if you're new to this topic, hopefully you got a pretty decent overview. As always, be sure to subscribe, hit that like button, and let me know in the comments below what topics you would like to see me cover. Thanks for watching, and I'll see you all soon.